Chinese investment in the U.S. has plummeted by nearly 90% since President Trump took office. A slowing economy, stricter capital controls and, of course, that trade war have affected China's capacity for outbound investment. Now, as trade tensions escalate, businesses in the U.S. have had to change their strategies. Danielle Robertson reports from Washington, D.C.
Agriculture, real estate and technology. Just some of the industries that China has invested in across the United States. When China's economy boomed, it was good for business. American companies wanted a slice of Chinese funds.
In 2016, we had a record for Chinese investment in the U.S. So that number was always going to fall because it was an exceptional number.
3 years on, President Trump slaps tariffs on Chinese goods, China imposes taxes, and tensions grow in a tit-for-tat trade war.
China has to do a lot of things to turn it around.
Amid political uncertainty, businesses in Washington, D.C. are being forced to turn their strategies around.
The Chinese investors, like any investor, is now perceiving some political risk and some just intangibility of hospitality to their money. And they're concerned that if they reinvest, especially in more liquid assets like real estate, they might not be able to return their money when they want it.
These newly developed luxury apartments in a trendy hotspot of DC received funds from predominantly Chinese investors in 2015. Totaling around $90 million, the project provides a lavish lifestyle and a unique community space. From DC's largest rooftop to bars and spas, the City Market at O project was developed by Roadside, and in May this year, they decided to refinance domestically. This development has transformed the neighbourhood in Washington, D.C. and won national awards. Roadside's decision to refinance this major project is just one example of many across the United States. Chinese investment in the United States has plummeted by nearly 90% since Trump took office, but the fall-off stems from more than just the trade war.
Number one is Chinese don't have enough money, as I've said. They're running out of money due in part to U.S. tariffs. And number two is the political climate is obviously negative.
The U.S. and China will resume trade negotiations in Washington, D.C. next month, but at this stage there seems to be no deal in sight. While a lot needs to change before the economy takes a real turn,
it can get much worse.
Danielle Robertson, CNA, Washington.